Tyler, one of the things you and I talk about a lot is the idea of always looking for the next stocks to buy, building out a watch list, whether it's existing positions you have, stocks that you follow that you haven't bought yet, or new stocks that have come on your radar. And we've got a couple of stocks that are on our radar right now that we really like a lot.
We do this all the time. I think one of the most sometimes the best ideas are the ones that you already have in your portfolio. What matters is when you if you wanna buy again, you gotta find the right time, and certainly with my stock, it's the right time, and I think what you're looking at is the same idea.
Yeah, the one that I'm going to talk about, I took a starter position in recently. It's a very small holding, still a little bit more in the speculative bucket of my portfolio, but I think it's really attractive what it's doing and the corporate legacy that it has behind that makes it attractive. I'm Jason Hall. He's Tyler Crow. This is Investing Unscripted. And this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas than the two radar stocks we have for you now, please go to our special link. It's fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. What's better than two great stock ideas? 12 great stock ideas. Check out our special link. Tyler, how about you lead us off?
So, yeah, this is a company you and I have talked about quite a bit for a very long time, sometimes good, sometimes bad. But in terms of operations, it's just been one of the best businesses out there. This is First Solar. They're a manufacturer of solar panels. It is a business that, has had we could say it's frustrations of owning this business. It's one that has grown relatively slowly compared to a lot of the other solar companies out there. A lot of kind of the tech-ended people of solar would say that they don't have the most innovative products, and, this particular solar panel they use is called cadmium telluride versus kind of the silicon photovoltaics that we know think of, most of the time.
More
It's
commonly referred to as thin film.
yeah, thin film solar. Some people kind of knock it as not the most technologically advanced or maybe not the highest conversion. But what First Solar has just, I think, has done better than almost anyone else in this business, just the blocking and tackling and knowing how to operate in a cyclical industry. Because solar is over 4 or 5 years, it's a very much a cyclical industry, depending on, where we are with subsidies, where we are in the business environment, where we are with interest rates. All these things really matter when it comes to solar. And so First Solar has been very prudent with its management, its balance sheet. It's always held a net cash position. It's been slow to build out manufacturing, so it's not, rushing to build out a new plant, and then all of a sudden it doesn't have enough orders to run this plant. And very managed, and it's encouraging for a business, for an industry that has seen the wild swings that we've seen in solar. But the reason that it's attractive to me right now, obviously the stock has gone down quite a bit in the last couple of years. I think the kind of the mania around solar industry comes and goes, and we're kind of a bit of a down spot. But what's attractive right now is that even though we're in a little bit of a down cycle, everyone's kind of a little concerned about how much growth we're actually going to have in this business. First Solar has set itself up in a way that over the next couple of years, we're going to see relatively strong production growth, and its manufacturing is more or less sold out. On average, right now, First Solar has enough manufacturing capacity to build somewhere between 11.5 and 13 gigawatts per year of solar panels. Right now, as of the most recent quarter, end of February, it had 80 gigawatts of orders on the books, basically, people waiting to get, panels. That is, you know, like 5,
Roughly six
6
and a half
years.
years at their current volume rate.
So there is a lot of pent-up demand, and that kinda helps, or booked demand that is going to be able to allow the business to kinda ride out the ups and downs. Yes, the margins may look a little different from quarter to quarter, but there is such a strong backlog of orders such that even if we were to see a slowdown for a couple of years, it can kind of manufacture its way through it. And it's one of the first times in a long time that the business has put some rather impressive production growth investments in place to kind of address this, because 6 years of if I'm not waiting for an airplane that takes 15 years to build here, right? We're talking about solar panels, and if I'm a developer, I'm not going to wait 6 years for my panels. So the company is looking to significantly increase its capacity, total manufacturing capacity, and as a result, we're going to see a significant increase in revenue as well as earnings, which at today's prices, I think today the stock trades for about 21 times earnings. It's not the cheapest I've ever seen for solar stock, and there's been times where, it's been valued for basically 50% of its entire market value was cash on the books. I pine for those days again. But at its current valuation, I think is a very reasonable thing for a business that looks like it's going to have relatively strong growth for the next several years at a decent price.
Okay, Tyler, I'm going to stick with a similar theme here in the renewable energy industry, but in this case, we're going to jump into the battery. So, one of the challenges with the growth of solar and wind is the fact that sun's not always shining and the wind's not always blowing. So, you need something to smooth out your demand and supply when those intermittent periods happen. And that's batteries. And Fluence is the company I want to talk about, Fluence Energy. And this is their key products here. And really, hardware is the main thing, GridStack Pro. And then they have software for managing the batteries as well. And a couple things that are really appealing to me about Fluence. Number one is Fluence's legacy. It's Siemens and AES. So it's the joint venture spin out of those two companies where they combined their battery technologies under one roof. So you have some really deep legacy from those two companies that are behind Fluence. I think that's really powerful. Then you start talking about the numbers and things get really compelling. So it has a backlog of about $3.7 billion, a substantial pipeline of over $13 billion. And if you believe some of the numbers, something like $1 trillion is going to get spent on batteries over the next decade for mainly these utility scale businesses. And Fluence is in growth mode right now. From its first year's financials, about $750 million in revenues, $2.3 billion in revenues over the past 4 quarters, growing at a very rapid rate. We go from that $2.3 billion trailing revenue over the past 4 quarters. They're expecting revenue about $3 billion at the midpoint. So still expecting a lot of growth. Tyler, that's important to me because you think about what's going on broadly in the renewable space. We cover a lot of companies in it, and there's a big downturn going on. A lot of companies are still saying that, oh, their first quarter and second quarter of the year are going to be half of what they were 2 years ago. And Fluence is saying, well, we're still growing and our pipeline is really expanding. And I find that really compelling. I recently took a starter position in the company. I have a very small position right now to give them time to earn more of my investment. And Tyler, ideally, the next time I buy shares of Fluence, I'm paying a lot more because they've proven out, they've started to generate the kind of operating results that I think at scale that they can. We got to see them continue to grow. That's the thing that I'm watching right now. I like a lot of what I see. I think there is some potential value there. This is more of a risk reward play. You're looking at with First Solar, kind of a little bit more of a valuation play because they're the adult in the room of manufacturing solar panels. They've proven for 20 years that they can make money there and they can be smart through the cycles. So this is less of a valuation play and more of a risk reward. Let's see if you can execute and be that First Solar in batteries. And I think Fluence maybe has the chops to do it.